I'm positively biased. I went to school in New York
Yes,
City,
you did.
so I have to say when I get up in the morning, I'm always happy when I'm here. So I really am happy for the United States that you really have had this very long streak of growth and increase in values. Now what I heard earlier about that actually wages are going up in some of the industries that haven't seen wage growth for a long time, which I think is important for political stability in the country. And you are still the world leader in innovation. We just heard about Netflix and the amazing successes of the large companies. So we are long America.
The volatility that we've seen based on interest rates and the Fed and the global, I mean, we always talk about the Bund and how we're tethered globally to some lower rates, that it may, you know, we may still be importing some disinflation maybe from the rest of the world, or that our 10-year isn't just based on our own economic dynamics. You know, maybe it would be much higher if it wasn't because of the rest of the world. Is that true?
Well, let me talk first about volatility and then we'll talk about the Bund. We have had a lot of re-regulation that has taken market-making capacity out of markets. And then when things have to adjust because investors have to reassess long-term earnings, like we've seen in the tech sector, because longer duration cash flows growth that is sort of at the tail reacts more aggressively to interest rate hikes. That is normal in a world where there is less market-making capacity. So we have to get used to higher volatility in the markets than what we've known in the past. So that's the first observation. Second, unfortunately, America and Europe are having very different directions at the moment. There's a lot more stability in the economy here. There's a lot more global growth. Despite all of the talk about trade war, the American economy is doing really well. In Europe, the picture is not the same. You have underlying good growth in a number of countries, but in others you don't. So you have a mixed picture, and we have waited far too long in Europe to reverse the interest rate cycle. So interest rates are artificially low in order to support the southern European countries, and they are very, very large deficits.
Think about that.
Yeah.
That's the whole, and we talk about that all the time, the multi-speed economies between Northern and Southern Europe, and yet no central fiscal authority, and you're putting all these disparate things together, hoping it works, but it's problematic to some extent.
It is, and we have to move forward to integrate Europe more intensively. The banking union is very important to be completed, so we have a stable banking system. But there's lots of things that still have to be overcome. You know, we are a very long-term investor. We don't really worry about daily fluctuations in the market, but more about the fundamental trends. And what we have to see is that we still have a lot of over-indebted sovereigns in Europe that really haven't made enough progress in deleveraging the public households. That's one. And second, we still have too much of a cozy relationship between the banking industry, and because they hold a lot of sovereign debt still, and the sovereign credit. So we need to make more progress on really changing that position.
But you say it's too late to raise rates. They've waited too long. If they were to raise rates right now, I mean, that would be disastrous.
I'm not sure. I think we have to do the same. We have to slowly but surely raise rates. No, the governments have to listen to markets. The Italian government has to listen to what has happened, and people are nervous. They have been for too long benefiting from the strong credit of Northern Europe. It's not just Germany, the Scandinavians outside of the Europe as much as it is inside, or the Netherlands, the Spanish, that all have done their homework. So the markets are reacting.
Angela Merkel has been trying to hold together that union. If she's not in leadership anymore, what would happen?
Well, she is in leadership, and don't underestimate her staying power.
Okay.
Do you think that there's a systemic risk if one of these countries gets in real trouble? Which is to say, do you think that the system has been de-risked, or do you think that who's holding the bag on some of this stuff?
Very interesting. I don't think any people are really holding the bag. It's more difficult to assess where the risk is today. It's an interesting observation you have. It's moved out of the banking system into the asset management industry, and I'm not sure that we have the proper view on where the risks are, so I cannot tell you. I can tell you they are not in the Allianz balance sheet.
I wish you knew.
I can tell you that it's not in the Allianz balance sheet. You want to be safe, put your money with us.
How many times a day do you think about Italy? When you wake up, do you think about it?
Yeah, we think about it quite a bit, but I think what you need to understand is with all the nervousness, Italy has a few things in its constitution that are very important to understand. There's a very strong president. After the Second World War, they made sure they have a very strong president that if something goes wrong in the government, he can intervene. It's very different to other countries. So there is a couple of safeguarding mechanisms in place that, your populist government cannot cause too much trouble. That's at least what we're convinced of. So we are, at the end of the day, worried to see that people behave properly when you have populist governments in, but at the end of the day, Europe is quite resilient. Remember 2012, everybody talked us dead. Yeah. We came back strongly.
So, Oliver, how much do you put in European investments versus other places based on the scenarios you just laid out? So
we are liability-driven investors, which is very important. So we don't, take large positions or speculate in the markets. And given that we have about 60% of our liabilities in Europe, a lot of our investments are obviously in Europe. But we run a very, very strong capital position. We are north of AA rated. There's very few places in the world where you have such a strong balance sheet. So we're trying to offset some of the investment risk by having very conservative capital positions.